All right, ladies and gentlemen, I hope you had a wonderful day. It was a boring but exciting day in the market because, I hate to say this, the Wall Street Journal pumped the stock market. We had a very wild reaction to Fed Waller. He said a couple of statements, but the interaction with the publications, Nick Timiraos, you may have heard me bring this name up about 30 days ago. Well, it happened again, and it left the market looking like one of those Bostic pumps from a while ago. Now, the best part was it chilled out. It didn't last long, but we were talking about it yesterday and all day, and I even made a play on it, but the Fed futures moved as a result, and even though the market moved around, the Fed futures stayed there. So it was absolutely crazy. We also had a bunch of data. Real estate prices ended up slowing. You got to hear from the Dallas Fed, or the Dallas Services, I believe, or Richmond Services, excuse me, and it was all over the place, but then the bond auction came in soft, and even though it was a bad bond auction, you saw the bonds take a dip and start going up. So maybe we got to be careful of that good news, bad news dynamic, but we have a lot to talk about. There is GDP tomorrow, and that will be a big event, but now, if you haven't seen the last couple of days, you may have heard me bring this up in the past, a lot of people are saying we are entering into the catalyst vacuum, meaning even though we have data this week, even though it's important with the volume being low, if the buyers don't step in or the rationale to make them want to step in not come until next week, we might see the markets move a little bit slower, even though I thought it'd move a lot faster, until we get into the big data next week. So we got a lot to talk about. I'm going to recap today. We're going to go over what really happened here in the market because it was wild, and then I got a couple plays for you. We did 300 into 3,000 on ARC. I'm going to show you what we did with that, but even better than that play, I want to share with you what I did on the Fed future. So Chad, what I need from you, a thumbs up on the video, make sure you're subscribed, and if you don't know, we are live Monday through Friday, 30 minutes before open, youtube.com/the stock market. We will see you there in the morning. Run it, baby.
Working to the couch, it's the 2020 election. Live in the hills, but I still get a spread. Started with a live, but I still reinvest it. Feel how I feel, then it feel like a blessing. I just want the lesson, I just want protection. I'm up and I'm down, but they sound like progression. Farmer never plans if he waits for perfection. Finger to the down, hold it down.
But right off the bat, we have to talk about what Waller said and the huge reaction that we got. If you watch yesterday's watch list, I would have thought the bond auction would have had a bigger reaction, but who would have thought that Waller would have been the big driver? Now, what did he do? What did he say? Well, before we get into that, you have to understand who Waller is. One, he is a voter, and recently, up until like a month or two ago, he was actually one of the more hawkish members. Lately, he has been speaking a little bit more bullish, and what he said today, it was borderline the same speech. However, he made one alteration to it, and young Nick Timiraos was able to pick up on it, but it definitely had a bullish tilt to it. What did Waller end up saying? He said that if inflation comes down, we don't need to have rates at a high price for much longer. We don't need to keep higher rates for a long time. That's pretty much what he said, and he even said if inflation comes down, he would even be willing to cut. So this is where it gets good because it was around 10:12, 10:13 that he made those comments, or a little bit after that. I think it was like 10:15 or 16, but then at 10:22 right here, what ended up happening, there was a tweet by Nick Timiraos. So he starts explaining what Waller was saying and what he was doing, and then he goes on to say, Waller last month, something's got to give, growth has to slow or disinflation will stall, and then Waller today, something appears to be giving, and it's the pace of the economy. He was discussing this, and he was saying, yeah, Waller's bullish. We were even talking about it live on stream, but then this little rocket right here, this is where it gets really crazy, because not only did Mr. Timiraos tweet that, if you go back through his tweets, he kept tweeting afterwards, and well, there's the quote where he's saying we don't have to have inflation higher. He keeps tweeting because he was at the event. and Nick Timiraos asks Waller pretty much what he tweeted and was like, elaborate on what you just said, elaborate on why rates don't have to be high. And pretty much in that explanation, Waller started talking about cuts and sounding like a uber dove, and the market started going crazy. The bonds, they got to run up with it, and the bonds were already doing good on the day, but like we were talking about yesterday, the real big thing that stood out, even after everybody got excited with Waller, even the Fed futures, this ZQH24, this is the March Fed futures, March of next year, and as a result of that statement and market reaction, people started pricing in slightly more rate cuts or the chance of a rate cut into March. So this was the big deal of the day. I'm telling you, it was absolutely mind-blowing because you saw the reaction. We ended up hitting right under the high that we hit on Wednesday before the holiday. And then we started coming down. And right here, this was the bond auction, and that 7-year bond auction. I said this one should have a lot more weight because it's the belly of the curve. Well, it came in weaker. There was a huge drop, and this was real. This wasn't even a fat finger. Even as a result, the VIX just skyrocketed and surged, and then it got slammed down and came down. Even the bonds, I took a bond short, it dropped and then started bouncing and ended at the high of the day. So it was a very interesting reaction when it was all said and done. It does even give a lot of warning signs because I'll tell you, if we start ignoring those bond auctions again, and if the bonds start brushing everything off, that will be stability, and maybe it will be the end of the era of everybody getting really sensitive on the bonds until if Powell wants to say something. We'll see. You never know with him nowadays, but the fact is we had all of this data, all of this reaction. The big mover was Waller. We ended up pretty much staying like slightly above where we opened, I believe. My chart's still messed up from Thanksgiving. I don't know if you see that, but for the most part, we ended up where we have been chilling the last couple of days. And now that leads into that point we talked about, the catalyst vacuum. There's just two things right now. The way people are looking at it, yeah, we can move a lot now. Every morning we wake up, there's a little bit of downside. What is everybody saying? Oh no, the rally is over. I'm telling you, in the last 48 hours, every time we have woken up and start looking at things, the market's a little bit lower. You have analysts, Michael Hartnett, a bunch of different people saying that this is a bearish setup and the rally is over. And then once again, we just melt up, hit a high, but then we come back down to stay and not move. So why this is important, because everybody feels a certain way, but now the markets really aren't moving. So if we get the data tomorrow, it doesn't move us much. Even PCE, if it kind of keeps us in this range that we have been in, this is all pointing towards everybody punting. And what I mean by that is, why would you buy or sell this week if after this week, next week you get big data, the week after it's even bigger, and then the week after that or the day after that, it closes out with Jerome Powell and a new dot plot. The way some people are breaking down the market, why make any sudden moves now when we are about to get the catalysts that are going to solidify the rest of the year? So that's where we're at now. Like I said, from the beginning of the week, I thought you would have got people waking up from Thanksgiving and getting ready, but there is definitely a little bit of tentativeness approaching it. And then, like I'm saying, you might as well wait if that data is right around the corner, especially since we have now wrapped up Tuesday and we are entering the middle of the week tomorrow. So besides that, all you got to do tomorrow, look for the calendar and watch the data. And I've went over the calendar the last couple of days, but what I want you to see is what happened today. If you start noticing bonds are brushing things off, the dollar keeps declining very well, maybe equities don't have to move much, but then again, how we've been reacting to the data until we get Powell, I would be very cautious. Like I said, I already had to pay for it today on one of those data plays, so we'll see how it plays out tomorrow. But for the most part, watch the bonds, watch those Fed futures. We've talked about it over the last 2 days here, and now we got to wait to the data, but don't be too jumpy because there's a good chance the special teams is out and everybody's pumping, and then we're just going to move around. But we'll have fun on stream. But now, let us get into the plays. So, right off the bat, I got a couple of different plays, and I'm going to start with the first one that I told you guys yesterday, and that is the ARC play. So, if you guys remember this, we bought these $46 contracts. I actually bought these like October 23rd, and this is what I was talking about today because we got them at like 38 cents. They dropped. I put them on every watch list. I guess I missed a couple of them, but it was there, and then they started going up. So now we're about like 70 cents away from being 1,000% gainer. And like I said, $300 into about 3,000 net value right now. It was a good gain, and I talked about it yesterday. I don't want to let that one slip away. So what did I do? I went with the ghetto spread. So what I ended up selling was the $50 contract. So follow with me. We own the $46 contract. I bought these at 38 cents. I have 10 of them. What I did today is I agreed to sell my shares or these contracts that I have the right to at 46. I said I'll sell the right to you at $50 a share if you pay me $1.28 per contract. And remember, I bought them for 38 cents. So in total, I spent $380 to buy all of the contracts that are worth about $3,000 now. And then I sold the right to them while still holding the contract, and I collected $1,200 up front. Why did I do that? Because it gives me my initial investment back. It lets me walk away with a net profit, a good one at that, a couple of 100%. And now I still get to hold these ARCs until January. And if the stock goes up to 50, even higher, and ends around 50 or higher by expiration, I will keep that $1,200 and I will make an additional $4,000. So it's a way to secure the play. We got a good play. It ended up hitting. We still got a little bit of time. I'm able to make sure I'm safe and then keep a hand in the cookie jar. You haven't heard that one in a while, huh? But that was the first play. I think ARC, again, if you don't understand the reasoning, I encourage you to watch the other videos, but I have been talking about this play since May. I did it first with shares, and thankfully I did it with options this time because it was really great leverage, but this was the ghetto rate cut play. Everybody talking about rate cuts and what was going on, and again, the dot plot, I believe the day that I got it was after the Fed. I didn't make a play on everything else, but I did make a play on ARC there, and the idea is I don't view ARC as a stock. I view it as a ghetto bond. It's linked to very interest rate sensitive stuff. If we really are going to cut and the market's going to believe it, everybody is going to pile into that, and that play ended up materializing. So that is play number one. Watch out for that. Then play number two. You already saw this. And again, none of these are a recommendation. I'm saying that as I'm getting into this play. Why? Because don't trade these futures if you do not know what you're doing. And what I'm playing here is a play that is already designed to lose. Now, why would you do such a thing, Josh? Because I've done it in the future, or I've done it in the past, and it actually ended up working out. And the reason why I like these plays is because it's supposed to lose. If it's supposed to lose, that means you are closer to the floor. Does that mean you can't lose money? No, you can still lose money, but I do know that there is somewhat of a limit on how much you can lose because I am betting on something that isn't a probability right now. So after the Nick Timiraos thing, I brought this up to you yesterday. You were hearing people making options on this, but I decided to buy one of these ZQs, and I bet on the March rate cut odds. Do I think it's going to happen? No. But right now, the odds are only around like 20 to 30%. If the market gets data and wants to react, or if you take notice, beginning of the year, if there's a crisis, something will make these rocket up. I love the risk reward on this play. So I don't know if it's going to hit or not, but all I know is that the potential gain is much, much larger than the downside, and the downside is limited. But with how things are going, if the rate cut really is going to happen, we benefit off of it. If there's a problem, we would benefit. The only real way you lose on this is if inflation data comes in really hot, there is no crisis, and everyone's like, yeah, wait a minute, no, bond yields need to go back up again, and then these will go back to where they were at the peak. So like I'm saying, even at the very worst, you could see it's a couple of basis points, but this thing does move a little bit crazy. I believe it's like, what? I want to say it's like $20 or $40 every like 0.01 or something like that. So you could do the math on there and figure it out. But for the most part, I like that play. And just with how things are going, policy end of the year, I definitely think it's going to be a good one to look at. Or if you don't want to play it, just monitor it so you can know what's going on. But that is play number two. And then finally, we'll go over that ZB that I did. Oh my gosh. I shorted the bad bond auction. So I'm down like $500-600. That's me. Wait, no, I think I was like, I was at 116. Actually, it wasn't that bad when you pull out the daily, but after, no, that was me right there. Never, I was going to say 116. I think I got in 116 flat. I took the candle off of there. And the reason why I was thinking going short, one, the data was bad. But if you remember, I just closed out a ZB to the long side. We got to ride it from like around there, it was a good play, but I was like, this is where I kind of sold out of. I know this is the breakout point, and at the very least, the bonds have been volatile, so if I don't want to stay too committed to that play, I know I'll be able to get out, but for the most part, it reminded me of something. It reminded me of the many times that I've played futures on data, and it's like, wow, that data was easy, and then it did the exact opposite. Well, maybe that chapter is over, so that's what we got to watch out for. We've talked about bond auctions getting hype, not getting hype, and well, after today, I really want to see if more data comes in, and if things aren't favorable, and you kind of see the bonds brushing off everything, then we may need to switch up that strategy, or you have to wait till the big guns come out with Powell and the real data that everybody wants to see. So other than that, I don't have any other plays. I will be watching the dollar. Keep your eyes out for oil if you want to trade. There's an OPEC meeting, and we are hearing a brand new rumor every single morning. That is going to be key to watch. And then you also saw the Baidu too. I'm holding that. They got clobbered today. I want to say it was a result of Pinduoduo doing good. The rest of the China names did bad, but I would keep an eye on these China names. They've been very quiet coming into the end of the year. Heard a little bit of stimulus, but we got either 1 month to hear some really good news, or I would punt that. But next year, I don't think it's gonna. I don't think you'll go through first quarter next year without hearing a lot of people say maybe China's going to recover, so we'll see what happens. But that is your watch list, ladies and gentlemen. Make sure hydrate, healthy, ready to go. Make sure post your watch list. Make sure we see you there in the morning. I need the armor on. I need the helmet shining. And I need you to remember, there's the only thing worse than a fool is thinking you are wise. Always be humble, baby. Don't let it get to you. Always be focused. And remember, if you don't want to take the efforts to be better, to treat people better, to treat yourself better, oh yeah, why? Is it because of a lot of reasons, or is it the effort? Don't be lazy, baby. Stay in the game, but it's okay. Don't let me get too deep. You know why? Because you should have known this. You should have already been right. It's already 2024, baby. So, Chad, I love you. God bless you. I'll see you in the morning. Have a wonderful evening, and peace out.